Good morning. My name is Al Pickett, and I'm the author of the Blackprint, the new rules for winning finance, freedom, and flexibility. And this video is just really about the financial markets and the financial markets unveiled. And essentially, what I want to show you in this video is the market has a definitive pattern that repeats itself over and over and over again. And today is actually a great day to really unveil that with the market being down quite a bit. And when I say the market, I'm speaking of the financial markets in particular. I mean the stock markets in particular, but all of the markets work the same. So it doesn't matter whether it's currencies, commodities, interest rates, stocks. It all works the same. It all has the same pattern, and that pattern repeats itself. So all of them are tradable. The only nuances are, what platform you're using, or risk management, things like that, which is all teachable things. So without further ado, I'm just going to jump right in, and I'm going to start with one of America's darlings. And first of all, I'm going to draw what that pattern is. So when the market's in an uptrend, this is the pattern that it makes. It's up, down, and up. So the price. So these candlesticks, these are candlesticks, which I'll do another video explaining that in more detail. But this is essentially the price. The price is over here, so 107, 108. Currently today is 102, so $102 a share for Apple stock. But when the market is in an uptrend, the price goes up, down, and takes off again. And when the market is in a downtrend, it goes down, up, and then takes off like that. So that's an uptrend, that's a downtrend. And this video is quick. It's one of those things where you won't be able to unsee what you've seen in this video. And once you see this, you'll be able to spot what the market is doing, no matter what is happening. So you can cut out the noise of CNBC and Bloomberg and all the other stuff. So real quick, just pointing out what's happening with Apple stock, right? We can clearly see that the market's in a downtrend. So it went down, popped up. Let me draw that over here. Popped up there, and now it's down. So clearly, in a downtrend, there's ways that you can profit and continue to sell this down. And essentially what happens is, within this whole down period, we're looking at a daily. So we're looking at each one of these candlesticks representing a full day of price activity. So that's it going up and down for that full day. But within that, these patterns repeat itself. It repeats itself even on smaller time frames. So, I'll say smaller time frames. I'm talking about 1 minute, 5 minute, 15 minute. Hourly, 4 hour, every 4 hours is doing the same pattern over and over and over. So this is Apple. So now I'm going to go and look at just the general market overall, just the Dow. Let's see here. Actually, let's look at the SPY. This is basically the S&P 500. So looking at this, same thing, right? Looking at the daily chart, down, up, down. That's kind of what you see here. Even though it's a little choppy over here and not very, very clean, if you go to a smaller time frame, that it becomes very clear what you should be doing, right? Let me delete this. Delete this. And delete this, and then I'll draw it again. So here, down, up, and down. And it started over here, right? Started over here. So down, up, down, down, up, down, up, down. So what happens from here is we'll likely go lower, just based on the pattern. Maybe it'll come up a little bit, but the probability is all about it going down further. And that's something else I do want to point out, is that this is not about predicting and guaranteeing that the market is going to move a certain way. It's about probability, the probability of something happening. So that's how investors and traders make money consistently, is looking at what the probability of something happening is. And this is an objective way to look at what the probability of something happening is going to be. So that's the SPY. Let's look at something like Google, which is now Alphabet. So here you can clearly, if you've seen that pattern now, you can see that it clearly was in an uptrend back in December, November, and now it's just kind of been all over the place. So there's absolutely nothing to do with it right now, and we are looking at a 4-hour time frame. So you can see that it was clearly in a trend back in November, December, and now it's just kind of all over the place. That being said, that is the brunt of how all of this works. Let's go back to that. It's very, very clear. We also gonna look at oil. Let's look at oil really quick. So look at this. So the reason I'm talking about this is because obviously you drive around, most of you all have cars, etc., and you've seen at the pump that the prices have gone down. You feel it at the pump because you feel it in your wallet. But that's been happening since back in October, November 2015. This is not something that's a surprise. So it went down, it popped up again, and it went down, and it's been going down, down, down. We can consider this a little pop up again, and it's continued to go down. So once again, not rocket science. You kind of once you can eye the pattern and see that pattern, you're not having to watch TV. You're not having to do all this secondary research of looking at financial statements and all that kind of crap. It's not that important. What is important is looking at there's one thing that all markets have in common, and from an objective perspective, and that's the price. You can always know what the price is by looking at the chart, and all that other information is really just noise. So that being said, let's look at something else. I want to show you currencies. So this particular currency is the Euro US dollar, and this is looking at each one of these little candlesticks represents 1 hour. And so what I want to do is just show you the pattern that exists, right? So this started at the end of 2015. This is December 31st. So market went down, it went up, and it went down, it went up just a little bit, and then it went down, and now we're just kind of sideways. So that pattern exists. It plays out over and over and over again. And then the rest of it is really, okay, what are the rules for entering and exiting a potential position, whether it's stocks, currencies, commodities, whatever you may be interested in. Particularly, I like currencies because I'm able to leverage up money, meaning I'm able to, use the bank's money instead of using all of my money to make profits bigger, and also can make your losses bigger. But that, once again, that comes down to risk management and probability and consistently winning in a trading environment. So that is the markets unveiled. And essentially the purpose of this video is for you to really just be educated about how the markets actually work versus the way the majority of the world thinks they work. And from now on, you should be able to look at any chart, type in any symbol, and look and see, okay, is the market, is it in an uptrend, or is it in downtrend, or is it just kind of sideways? You should be able to do that. Just, it probably take you less than 10 seconds to do that. So that is the end of this video. If you're interested in learning more about potential coaching and students' results and that kind of thing, please feel free to reach out to me at al@blackprintnewrules.com. That's al@blackprintnewrules.com. newrules.com. All right, cheers and have a magnificent day.